Hello and welcome everyone to Oil Asset of the Day for the 10th of March 2020, presented by myself, Phil Carr, at the Gold and Silver Club. So first of all, what do you need to know as we head into a new week? Well, of course, of the Sunday open through to Monday, we saw over a 20% decline for oil prices. So a 1,000-point gap to the downside, now followed on Tuesday by a 10% increase in oil prices after we've seen Donald Trump promising a stimulus package for the US economy to combat the coronavirus. And as such, we're seeing a lot of the energy complex start to catch a bid here. In fact, we've begun to build our positions here, already up over 200 points on one of our energy trades. And you can see this now after the gap on the open, the dust has started to settle. And now we're seeing the energies catch a bid. Now, be mindful that we do, of course, need to keep it updated on the narratives over the course of this week. Last week on Friday, we, of course, saw a breakdown in talks between Russia and also OPEC. And as such, no agreement to continue to cut output. We've really seen that have a tremendous impact on the oil market over the weekend. And this, of course, large fall to the downside with oil prices. Not a market that you'd want to be on the wrong side of into the weekend here with that significant gap lower, over a 1,000-point move. But with that comes huge opportunities as well. So this volatility right now is absolutely perfect for trading. This is what you want. You want to see these large moves each day here, gaps on the open, ability to then trade smaller timeframes and then take advantage of a lot of the volatility that we're seeing day to day right now, not only for the energies, but also on the precious metals as well. These are great times to be trading at the moment. But as always, you want to stay very nimble on the trades here too. So what we've effectively seen, as I mentioned on the week ahead commodity report, was that oil did gap lower off the open. We initially found some support around $32 per barrel. We wanted to wait though. We didn't want to start building any positions at that level. Often what you'll see is another retracement retest of that level. If we'd had broken $30 per barrel, we were expecting a fairly sizable decline. So that's exactly what we saw. We broke below 30, we tapped $27 per barrel. Then that's where we started to see a capitulation for oil support coming in. And it's after that where we've started to build into our energy positions. Now, over the course of this week, we do also have the European Central Bank announcement later on this week where they are scheduled and anticipated to cut interest rates. You saw, of course, what happened off the back of the Federal Reserve cutting interest rates last week as well, which really catapulted a lot of the market significantly higher, gold, silver, precious metals in general. And also you saw that have a big impact initially on the stock markets, although they rolled over later on in the week. You want to keep a very close eye on all of the headline news items regarding the coronavirus. You would have seen, of course, at the weekend that the acceleration in more people around Europe getting the coronavirus, particularly Italy, which is now on lockdown essentially. In summary, really what you want to keep a very close eye on over the course of this week is of course going to be the API data on Tuesday, oil inventories data on Wednesday as well, the European Central Bank announcement. At the moment, oil is just great to trade these intraday moves. So we're seeing really big volatility, 20% decline on Monday, 10% update just on Tuesday already. As I mentioned, we're up 200 points in our position right now. And I'm looking at really just a continuation of this over the course of this week, where this volatility is going to provide some really excellent opportunities here with oil over this week. So with that, that's been Oil Asset of the Day. And of course, I wish you good trading.